So I asked a guest this earlier. I'm going to ask you the same question. What's at stake for this PCE report? We've heard from the Fed. They believe that inflation's moderating. They like the pace. They like the trend. They're really focused on the job market. So what's at stake?
Yeah, I think we will confirm that inflation is just continuing to slow with this PCE number. Of course, when the PCE data come out, it's not necessarily a big surprise. We know most of the price inputs from CPI and PPI that came out a couple weeks ago. This should show another benign monthly increase. We're expecting a 0.2% month on month. That's a very good, around a 2% annualized kind of pace. And I think that does just keep the focus on the employment data.
Benign is an interesting word. A lot of people are using that nowadays. Sometimes we get inflation reads, we call it benign. Sometimes we talk about the rate situation we're in with bonds. Some people say that's benign. I want to look ahead to something else that may be a bit more volatile, the jobs report coming up just a week from today. So how important is that, not only for the markets, but for the Fed?
Yeah, I would not use the word benign to describe the labor market necessarily. We do think that this is a weakening labor market. We've seen that more clearly in the jobs reports the last couple of months. Of course, we've had a much more rapid rise in the unemployment rate really over the last 4 or 5 months, rising a tenth on average each month. Payroll job growth has now started to slow and has been revised lower every month. We think we'll see a continuation of that next Friday. We're expecting a relatively soft 70K jobs added in September, expecting the unemployment rate to tick higher. And that is a pretty uncomfortable report for the Fed.
All right. I want to hit on something else that I'm not really sure the Fed looks at. You tell me. The recent rise in commodities following that Chinese stimulus. That rise in commodities can also often be inflationary. Is that something that you think the Fed is monitoring? Will that at least potentially influence their decision coming up in November?
Yeah, I don't know if we'll see the impact of that as soon as the November decision. Of course, we are watching the inflation data. It would be inflation that would derail future cuts. At this point, we are of course coming from a place of very high inflation, but we actually have seen some shipping costs rising this year, input costs rising, and it just seems like the U.S. consumer will not accept further price increases. So even with those input costs rising, we've still seen goods prices falling, for instance. This does just seem like a soft demand environment, and that's what is leading to slowing inflation.
All right, I want to get to your Fed forecast. So you're forecasting a 50 basis point cut for the next meeting coming up in November, and then after that, 5 quarter-point cuts. In your mind, does that mean that if we see that path, is that inflation continuing to moderate and the job market being soft? Is this us hitting the soft landing? I mean, this forecast, what's the scenario for the economy, for the markets, for the job market, if this does play out?
Right. I would say that even the risk to our forecast is that the Fed could be front loading even more of this easing, because we do think that is coinciding with a further weakening in the labor market. And it does seem like Fed officials are just going to be pretty inclined to get back to at least closer to a neutral rate as soon as possible. The issue is we don't quite know where neutral is this time. So maybe as you're front loading some of these big cuts, at some point you want to go a bit slower and feel out where a neutral rate might be. But if it does look more obvious that the labor market is slowing, I would say the risk to even our forecast is that the Fed is cutting more larger cuts and cutting a bit faster.
Oh, so you're saying the risk of the forecast is we might get a 50 basis point cut in December as well?
Yeah, I can absolutely see that. We'll see the next 2 employment reports. Of course, we're going to get 2 employment data reports before the November decision. I wouldn't even be surprised if they could go a 75 in November. Of course, we're penciling in 50 basis points, but it's just going to be very labor market data dependent.